We welcome all our viewers here in Nigeria and around the world. This is Your Money Moves. I am Bosin Omofaye. We're live at the FMDQ studios in Lagos.
And I am Melissa Enoch. It's Wednesday, September the 17th. We thank you all for joining us on the show at this time.
Okay, let's get the show started. We begin in South Africa, where the country's inflation came in today better at 3.3% for the month of August, slightly lower than 3.5% in July and below economists' forecast of 3.6%, which was driven by softer fuel and food prices. Let's look at the statistics data. The surprise slowdown comes ahead of the Reserve Bank's rate decision on Thursday, the 18th, with analysts saying that the SARB could open the door to a 25 basis point cut as the economy struggles with weak growth in Africa's most advanced economy. In Nigeria, the central bank has directed major banks to obtain regulatory approval for the appointment of new managing directors and CEOs at least 6 months before the expiration of the substantive CEOs. The financial regulator says the new rules targeting domestic systemically important banks also require successor announcements to be made to the public no later than 3 months before the outgoing CEO steps down from office. The central bank says the directive will strengthen corporate governance and avoid leadership uncertainty that could destabilize the banking and the Nigeria's financial system. And those are some of the headlines as we get today's News Now started. Let's cross over to Melissa at the FMDQ archives for more in your News Now. Melissa, over to you.
Thank you very much, Bolsing. In trade news, the World Trade Organization has released its 2025 World Trade Report, warning that artificial intelligence could reshape global commerce. The study says AI may boost cross-border trade by nearly 40% by 2040, but only if countries bridge the digital divide, invest in skills, and keep markets open. Let's take a listen.
AI is already reshaping our economies and our societies. Though not without risks of its own, AI has the capacity to transform the ways we produce, consume, and trade. But one important question is whether AI will lift opportunities for all, or whether it will deepen existing inequalities and exclusion. This is the central question posed by this new report, entitled Making Trade and AI Work Together to the Benefit of All. The report builds on earlier WTO research, last year's World Trade Report on Trade and Inclusive Growth, and our first dedicated study of AI and trade released in late 2024 called Trading with Intelligence. The new report moves the conversation forward by placing socioeconomic inclusion at the heart of the analysis on AI and trade. In fact, it brings new data and tools, in particular fresh simulations quantifying AI's potential impact on trade and GDP, together with a joint WTO ICC business survey. And I want to thank ICC Philippe Varin, who may be here in the room, and John Denton for excellent partnership and collaboration on this. Now, what do the findings tell us? First, AI holds major promise to boost trade by lowering trade costs and reshaping the production of goods and services. WTO simulations suggest that by 2040, AI could increase exports of goods and services by nearly 40% above current trends. 40 by 40. AI is already...
In Northern Africa, Libya's Insurance Supervisory Authority has joined the Global Federation of Takaful and Islamic Insurance Companies in a move aimed at strengthening the country's Takaful sector. Authorities say new legislation and strategic programs will drive growth, with plans underway to sign an MOU to boost cooperation and expand partnerships regionally and internationally. In Kenya, the Africarena Nairobi Summit 2025 is underway, bringing together innovators, investors, and ecosystem builders to showcase Africa's tech and climate solutions. In her keynote, Melis, managing partner at Catalyst Fund, presented data on climate tech funding flows, sector trends, and the urgent need to unlock local capital, emphasizing that closing systemic gaps is crucial for Africa's place in the global green economy. Let's pay attention.
What a year 2025 has been. It's been a year where we've had, again, stark reminders of the cost of climate inaction. $250 billion losses from wildfires in California, to the deadly floods in Spain, to heat waves across Europe and Asia, and Africa was not spared. Here, we also had devastating floods because of El Niño events in Kenya and Tanzania. We had several cyclones that really affected Eastern and Western Africa. So these are no longer events that happen once in a century, once in a decade. They're really part of our new reality. Not to mention the subtle ways in which climate change is affecting our livelihoods, the way people earn income, our jobs, across all sectors of the economy. But this vulnerability also presents one of the biggest opportunities of our time. According to the BCG, so I didn't say it, the experts did, the global market for climate adaptation and resilience alone is projected to grow to over $1 trillion from 2025 onwards. And if we look at the decarbonization market, that's actually projected to grow $4 trillion between now and 2030.
In other news, the African Development Bank Group and the Ethiopian Capital Market Authority have signed a $400,000 grant agreement to support the setup of a public disclosure platform and the rollout of new financial products at the Ethiopian Securities Exchange. The project introduces products such as exchange-traded funds, sukuks, and green bonds alongside a disclosure platform to improve transparency, investor decision-making, and fair price discovery. In South Africa, a seminar hosted by the Institute for Security Studies has launched the latest financial flows report, exploring how Africa can diversify its sources of development finance. The session highlighted declining traditional funding, emerging investment partners, and policy actions needed to strengthen Africa's position. Let's now listen.
Industrialization, ladies and gentlemen, is widely recognized as one of the most powerful drivers of economic transformation. It fuels sustained growth, creates jobs, enhances productivity, and lays the foundation for inclusive and resilient development. For Africa, this pathway is not optional, it is essential. Our continent's manufacturing sector stands at a strategic turning point right now. We have the demographic dividend of a young and rapidly growing population, increasing demand for processed goods, both within Africa and globally, abundant raw materials, the African Continental Free Trade Area Agreement as an enabling framework, and major investments in infrastructure and special economic zones. Now, together, these factors create a unique window of opportunity to reignite Africa's industrial momentum. However, we must also acknowledge the challenges. Africa's structural transformation has largely bypassed manufacturing, moving directly from agriculture into low-value services. This trajectory has limited productivity gains and constrained our ability to create quality jobs at scale.
Finally, on news now, the European Bank for Reconstruction and Development has extended a 10.6 million euros loan to Egypt's GoBus for Transport, the country's first private intercity bus operator, to fund the launch of a new electric fleet. The financing, backed by a 10% first loss risk cover from the European Union under its EFSD Plus guarantee program, will support the acquisition of up to 30 electric buses, along with microbuses and service vehicles. The move is expected to cut emissions, reduce congestion, and promote cleaner, sustainable transport across Egypt. I am Melissa Enoch, and that's it on News Now for today. The show returns shortly after the break with Bolsing at the ticker tape room for our markets round.
This annual gathering represents not just a meeting of minds, but a powerful platform for important debate on the future of our continent. A future where energy security and sustainability are within reach.
African countries account for almost 20% of the global population, but only for 4% of the world's total energy investment. Now, this imbalance should be ringing an alarm bell for all of us.
Our priority must continue to be to end energy poverty for all Africans, as well as create an enabling environment where the oil and gas industry can thrive, be beneficial for local content, as well as be responsible with the environment.
Visit www.aecweek.com to register today. The African Energy Week, it's more than just a conference.
everyone, and welcome back to your Money Moves this Wednesday, the 17th of September, live from the FMDQ Satika Tape Room. Just before we go on a market round, let's remind everyone that the Monetary Policy Committee of the Bank of Ghana has concluded its two-day monetary policy certain meeting, and we're expecting the Central Bank Governor, Dr. Joseph Asiama, to brief the government in Dr. Mahama, in John Mahama in Ghana. All of that expected later in the hour, as soon as the Central Bank Governor gets his press briefing ready. We're taking that for you on Frontier Africa Reports. Let's take that and go straight into the trading day just to check how the market is performing this third session for the week around 14:19 GMT. Bring up the numbers. The Nigeria's equities market returned to positive very strongly today, down by 0.1% on Tuesday. That moved into positive territory today by 0.35%. The NGX All-Share Index crossed into the 142,000 region. The BRVM in Cote d'Ivoire remained a soft 0.37%. The Nairobi stock market also remained skittish below the 178 where we finished off on Tuesday, down today by 0.26%, roughly a quarter of a percent. The Egyptian market is heading towards 35,000, up 0.38% after a positive start on Monday. The GSE dollar 1,492.4 by 0.03%. We've seen consecutive two sessions of the Nigerian currency reading positive on the US dollar. Let's go to the commodities. You got the news just this afternoon, about an hour or so ago. The Energy Information Agency of the United States talking about the US crude inventories sharply lower for last week. That's about 2.68 million barrels that per day. That was the latest figure. And of course, that flew into oil market with prices now for the US WTI around 64.18, around 12.55 GMT. The London Brent was printing about 0.42% in the red at 68.18. We'll look at the rest of that. Whole pricing also of the rate cut by the U.S. Fed later today, 7 p.m. Nigerian time. A formal press briefing is expected 7:30 West African time by Jerome Powell, the head of the FOMC. At least 25 basis points is what the markets already are priced in. Let's move on and talk about the rest of the commodities. Metals, by the way, gold gave up some of the gains it made on Tuesday, 0.39%, around 12:58 GMT, 3,710, as the dollar made some recovery back ahead of today's interest rate decision by the FOMC. That's the Federal Open Market Committee. Copper prices around 4.57, sharply lower by 1.5%. Platinum fell below the 1,400 psychological reading today by 2.21%. That's a very deep dive for that basic resource. Let's move up and finish up around the soft commodities with coffee prices slowing below the $400 today, 390.05, 12.59 GMT from various market sources. That's 4.71%. Sugar prices also down because of the supply outlook out of Brazil. Of course, you know, Brazil is very heavy in terms of exports, in terms of sugar and coffee as well. Cocoa prices, however, climbed 0.34%, 7,396. What else am I looking at? Palm oil, 1,053. That looks like a new reading for palm oil, 0.39% to the upside. Again, the price of its main competitor, soybean oil, remain very strong at the marketplace. There's a competition between palm oil and its main rival, which is soybean oil. And that's part of the commodity markets data we're tracking for everyone. Let's get back together on the show tomorrow. That's your Money Moves Wednesday. Tomorrow, Thursday, the 18th, we expect South Africa's interest rate decision also on the show. Keep an eye on that from me and the rest of the team at Frontier Africa Reports at the FMDQ studios in Lagos. We say thank you for watching, and we'll see you very soon.